Hello traders and welcome to another video review. Today is Wednesday, June 18th, 2025. Let's take a look at charts straight on from the beginning. Euro-dollar 4-hour time frame chart is showing us a rejection of the technical resistance and the supply zone, and the market is positioning itself ahead of the Fed interest rate decision that will take place at 8 o'clock p.m. Tonight. So ahead of this decision, we got the down movement towards the level of 1.1476, which is still above the 100 periods moving average, obviously the blue line, and above the trend line support. Nevertheless, please notice the fact that this is the last wave in the cycle, in the impulsive cycle, the wave 5 possibly had been completed. Now what we need to do is to confirm that this is the top of this wave 5, and the first thing we got this is that 3-wave downside movement. Let's just measure how big is this movement. So I will take my price range and let me just measure how much it is. Right now it's minus 1.34%. Now let me just measure again what is that correction here. So this correction is minus 1.82, which means this is still not the overbalance of price and time, because this correction to the downside is bigger than, is lower than this bigger correction, minus 1.82%. Nevertheless, just because we don't have the overbalance of price and time doesn't mean that the wave 5 is not in place. The overbalance is, of course, the first very easy to spot but important clue that possibly the downside movement in our situation might be no longer a part of this impulsive structure. For now, we can still assume that this correction to the downside is still a part of some sort of the wave 5 development, right? So we need to break at least below minus 1.82% in order to confirm the top for the wave 5. All right, so it looks like, where we need to move, how deep to the downside, how low we need to move to have minus 1.89. 100 periods moving average is minus 1.76. So if we hit the trend line, is minus 2.11. All right, so any breakout below the trend line is obviously the overbalance of price and time, and this is the first confirmation wave 5 high is in place. All right, so the correction is to the downside. Now, because we completed the 5-wave impulsive cycle, that means that this movement to the downside is a corrective in nature, and we will be waiting for this correction to complete, and then for that uptrend to basically continue, right? So for now, looking good, waiting for the correction to the downside to extend. If there is no extension of this correction to the downside, that means this is just the top for the internal wave 3, ABC to the downside wave 4, and the last push to the wave to the upside in wave 5 is in progress. So that's the euro dollar. Let's take a look at the US dollar index ahead of the Fed interest rate decision. Let me just grab it here. There you go, US dollar index. What is going on here? Let me just switch to daily because that might be quite important. So the first thing is, let me just move to the right. There you go. So the first thing is, we are below the lows of the 2024. That's very important. We got 2024 low. This is 2025 first low from the April, and this is the recent low from June 12, 2025. So this is the temporary technical support, swing low, and temporary technical support, very weak technical support, 97.50. Since then, we got the some kind of a pullback to the upside. However, the momentum is still above the level of below the level of 50, above the level of 40. So momentum is still negative. Anyway, we are trading below the 100 periods moving average on the daily time frame chart, and to be honest, without a breakout above this local swing high, which is 101.95, we cannot say that the uptrend on the US dollar index is back up. Now, where is our trend line? We can place our trend line here, but it's not really helpful. We can place our trend line here, so we are far away from the trend line. Nevertheless, what's important is that movement to the upside, that rebound, that pullback to the upside. Let's find out how big it is, or big it was, basically. So this is roughly around 2%. No, it's 4.15%. So we need at least 4.15% pullback from the lows of 97 and 57 in order to have an overbalance of price and time, momentum back into the positive territory, and breakout above 100 and 1.95. Then test of the 100 periods moving average is possible, and then upside development is possible. Without this movement to the upside, the market will still go lower, would likely go lower. So that's the euro dollar. US dollar versus the Japanese yen, another market we've been following for days this time, and as you can see, this market is still between major supply level, of course it's our pink rectangle, and major demand zone, it's our green rectangle. All right, you know what I mean, yeah. So it's pretty clear where are they on the chart. Just recently, we've been rejected from the 145.48, as you can see here, after the bounce from the low at 142.81. So we got the rejection test and rejection of this level, and the market stays even in some kind of a narrower range, trading in between those two very characteristic levels here on this short time frame chart. So here you are, those are the levels, right? So we need a breakout either to the upside or to the downside. We're patiently waiting for this market to tell us where it wants to go for, because now any direction is good enough for this market. It can go up, it can go down. So without breakout, there is no confirmation of further movement on the US dollar versus the Japanese yen. Now let's take a look at gold. The gold might be affected by the Fed interest rate decision, as usual. So what do we have here? We tested the swing high from May 7th, 2025, located at 3,437. We made a new marginal higher high, 3,450, and then reversed back into the local range around with the momentum around the level of 50. Local technical support, weak technical support, is the low from the yesterday is 3,365. So any breakout below this level might give us a test of the 100 periods moving average, and then of course the lower levels might be very easily tested. So this is the situation with the gold. Of course, the short-term, long-term, medium-term trend on gold is up. However, if we just switch to daily, you can see that the gold is having a problem with 3,500, 3,437, 3,450, right? So that $50 gap here, it's a problem since the top from the April 22nd, 2025, right? So the uptrend a little bit stalled, right? There's some kind of a consolidation, some kind of a ABC pullback. Then this uptrend is trying to build up the momentum. It didn't actually work that well. Nevertheless, this is still the uptrend. However, it's not that strong. It's not that aggressive anymore, and you can see it on a daily time frame chart. So the gold might have a chance to go higher, right? Might have a chance to go higher as well. And last but not least, will Bitcoin react to Fed interest rate decision? That might be quite interesting. Just recently we got the test of this technical resistance at $109,000. We went down obviously towards 103,500, and then the volatility, as you can see, has been subdued. Basically, we got this level here as the technical support. Obviously, we can add one more short-term technical support as the yesterday's low might act as the technical support. Nevertheless, it's pretty clear that this market behaves a little bit like the US dollar to the Japanese yen, which means this market is trading between the supply zone and between the demand zone. horizontal trend is being right now developed on the Bitcoin. We are waiting for the breakout. Nevertheless, the short-term trend is up, the mid-term trend is up, and long-term trend on Bitcoin is still up. As long as we are bouncing from the demand zone, the outlook, the immediate outlook and short-term outlook remains bullish. That's everything from me for today ahead of the Fed interest rate decision. Remember, 8 o'clock p.m. Tonight, Central European time. So please stay focused, stay vigilant. Volatility might increase during this news event. Everything from my side. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.